All right, we're about 2 minutes away from the end of the trading day. I'm Katie Greifeld, and I'm all alone because Romaine Bostick is not here, but thankfully joining me now.
What did you do with him?
Let me introduce you first. Tim Stenovec, Carol Massar. We bring together all of our various audiences, and I don't know, he got on a plane and he left, so.
Okay, I didn't know we had a choice.
Yeah, no, they let him leave. It's just you and I that have to stay here, but he's missing a big rally, and he's missing a big round number when it comes to the S&P 500. Maybe, just maybe, depending on what happens in the next 75 seconds, we're going to see 7,500 at the closing level on the S&P 500.
Yeah, we could also see a record close on the NASDAQ 100. You know, everything is awesome. It's kind of fascinating, Katie. We've got wars going on. We've got inflation that's outpacing wage growth. I mean, I don't know. I still can't make sense of with everything going on and how equities just continue to move higher and higher.
We've also got a pretty big appetite among some investors for IPOs, at least when it comes to companies that play in the AI inference space.
Oh, yeah.
Cerebras Systems up 68% right now. It's trading at more than $311 per share. That's up from $185 for that IPO price. So off the best levels of the day. Right when this opened, Katie, you were probably watching.
Yeah.
Paused for volatility.
Yeah.
Right at the opening at $350 a share.
Pretty stunning reception, especially when you think about just how hyped this IPO was. There was the question as to whether or not, you know, maybe we'd see a little bit of a fizzle just given how many times this was upsized, et cetera. But certainly, what a debut for Cerebras here. You take a look at the broader market right now, though. The S&P 500 looks like we are going to do it, finishing maybe 0.8% higher. The NASDAQ 0.9% higher. Similar gain when you take a look at the Dow. So a big rally here. And Carol, like you said, I mean, just risk appetite defying what we're seeing when it comes to the headlines.
Like I say, right? Everything is awesome. All right, let's go back to the S&P 500, folks. Just pulling it up on my Bloomberg. You dig deeper. Not quite an even split, Katie. You've got about 297 names in the S&P 500 higher today, gaining ground, 205 to the downside, and you've got one unchanged.
Well, you take a look at the sector level, slightly more green than red. You had 6 sectors finish in positive territory, 5 in the red. In terms of what led us to this new record high, it was tech, that sector higher by about 1.9%. That is the bright green slice on your screen right there. You also saw a good day for energy and for utilities, interestingly enough. Then you take a look at the downside. Materials lower by about 0.8%, Carol. Real estate down as well.
All right, let's go through some of the individual gainers, if I may. And no surprise, I'm going to start with that big IPO, Cerebras. That one up, 108% at its highs today, finishing the day with a gain of about 68%. Yes, you could say some money left on the table, but a very strong IPO. We know it was oversubscribed. I mean, pick your superlative. And I've got to say, all of my gainers have kind of an AI component to them. So Cerebras jumping, as you know, trading debut, it raised $5.5 billion. Market cap is way above that. An upsized, hotly anticipated IPO, this year's largest so far. First-time share sales raising nearly 60% more than its target when it launched. And again, like I said, above the marketed range and so on and so forth. So we should point out that our Ed Ludlow did talk to the CEO, Andrew Feldman. He talked about the IPO was more than 25 times oversubscribed. He said the company is prepared to work on further developing its unique AI computing, aiming to take a place among the leading providers of technology in the lucrative market. So a lot there, and I highly recommend that you check out that interview. I said there was kind of an AI theme, so let's flip it on over to Cisco, your number one gainer in the NASDAQ 100 and the S&P 500 today, up more than 13%, jumping by the most in more than 14 years. The company did deliver a better than anticipated sales forecast and announced plans to cut thousands of jobs and attempt to focus on the fast-growing AI market. The company also announcing those layoffs will affect more than 4,000 jobs, or fewer than 4,000, I should say, and the reductions will result in as much as $1 billion in severance costs and other one-time expense. I'm talking tech, and I know we've got another tech name crossing the Bloomberg.
We do. Applied Materials, these numbers crossing now. Second quarter net sales coming in heavier better than expectations, $7.91 billion. The estimate had been for $7.67 billion. When it comes to second quarter adjusted EPS, coming in just about at expectations, $2.86. But the reason that you see the stock climbing after hours right now has to do with their third quarter net sales forecast. They see that figure between $8.45 billion to $9.45 billion. So a $1 billion range there. The estimate, though, had been for $8.15 billion. So boosting that outlook for their net sales, and you can see that's boosting the stock. This was a stock, Carol, that was higher by 70, 80% year to date through today's close. So the bar was high as well.
Yeah, absolutely. But looking like, at least initially, we'll see what happens on the call, that it might gain certainly into tomorrow's session, certainly gaining in the aftermarket. Hey, I'm going to go back to one more that also has a little bit of an AI slant to it, and we're talking about Ford. Ford up about 6.6% today. The rally in this name continuing for a second day. I think it's a two-day gain of about 20% of enthusiasm for Ford's pivot toward energy storage, the latest sign that investors are eager to embrace companies that stand to benefit from power-hungry data centers. Remember, companies investing $2 billion to get into the energy storage business, which includes producing large energy cells for the storage business. You did have one analyst make a call yesterday over at Morgan Stanley who kind of sparked the enthusiasm in this story or this narrative. But another one, and I know, Tim, you pointed this out, Dan Levy over at Barclays put a note out today. He cautioned that the automaker must still deliver on the promises that it's making in this bet. But nonetheless, investors buying in, again, rallying big time for a second day here, Tim.
Will the cars drive themselves?
I don't know. One can only hope.
Okay. Let's talk a little bit about some stocks that fell today. Boeing shares down 4.7%. This came after China agreed to buy 200 planes from the company. It's a multi-billion-dollar deal. It would mark the nation's first purchase of U.S.-made commercial jets in close to a decade. 200 sounds like a lot, but not when analysts were expecting 500 737 MAX to be ordered from Chinese airlines, as well as some wide-body aircraft as well. George Ferguson over at Bloomberg Intelligence said that an order for 200 jets, quote, is a disappointment for a market looking for 300 or more, and details around the type. China has only placed orders for 39 Boeing planes this decade. So if it is carried through, and that's an important part of the conversation, if it is carried through, it could mean a return to buying from the U.S., according to Bloomberg Intelligence.
All right.
Go ahead.
Sorry. Oh, got an application software company, Figma, reporting some results here after the close. Just real quickly, I'm going to go to the outlook. See second quarter revenue, $348 million to $350 million. Folks, that is above what the street was forecasting of $329.7. Go backwards to the quarter that was. First quarter revenue, that too came in better than forecast. $333.4 million. Street estimate $316 million. And the company seeing fiscal year revenue, $1.42 to $1.43 billion. That too is fairly above the street estimate of $1.37 to $1.37 billion. That's not a range, folks. That's just a number. And nonetheless, Figma is up about almost 20% here in the aftermarket.
Ow.
Yeah,
Right?
I mean, but remember, don't forget it. Back in August, Figma was at $122 a share, and that Adobe was going to buy it before it went public.
I remember.
There were concerns about like what AI could do to this business, and it's been on a steady move down since then. So, yeah, some good news for Figma here, but broadly speaking, still off of those highs from last year.
22% of the float is short, so investors could be doing possibly some short covering here as a result.
All right, let's get to some of the other decliners on the day today. Doximity shares taking a hit. This is the healthcare software firm. You may have used the firm to communicate with doctors remotely, in fact, maybe send them messages or even do remote appointments. Shares down 23% today. Gave a full year forecast. It was weaker than expected. AI investments pressuring the company's earnings. JP Morgan lowered its price target, as did Goldman Sachs, Truist, Wells Fargo, BMO, RBC, Mizuho, among others, also lowered their price targets. And finally, shares of Wolverine Worldwide, known for those Wolverine 10,000-mile boots, Katie, but also Chaco's, Saucony, Merrill, Sweaty Betty as well. Shares fell by 2% today. The footwear and apparel maker reported first quarter profits and revenue that topped Wall Street estimates, though it issued what Bloomberg Intelligence called a, quote, cautious outlook. Wolverine Worldwide shares down 2%.
And of course, that follows Birkenstock yesterday,
Yeah.
that big wipeout that we saw for their shares down about 13%. But let's talk about the bond market. I'm going to do my best Romaine Bostick impersonation here because you take a look at what happened in yields today, a little bit of divergence, but really a quiet day overall. We know that it's been a very dramatic time in the bond market. We saw that big sell-off yesterday, especially at the long end, but pretty quiet today. You could call that unchanged, but the absolute levels that we're talking about, I mean, nearly 4.5% for the 10-year Treasury yield, above 5% for the 30-year yield. It's pretty amazing, Carol.
Yeah, quite a switch, right? And it just talks about the kind of inflationary concerns and expectations of what the Fed is more likely to do, an increase versus maybe a cut. So
You're not going to find that conversation in the equity market right now.
no, it's really kind of weird, right?
Is Romaine back tomorrow?
No, but I will have a friend tomorrow.
Okay.
Okay. Well, you always have a friend with us. So
That's true.
Not to worry. Not
Thank
to
you,
worry.
guys.
You're welcome. Welcome.